Hi, it's Paul from globaltradingsoftware.com, and this is a simple video on trading oil. Day trading oil, both before the oil pit open and then after the oil pit open. We're going to use the VWAP Predator, and this is the think or swim version, so a lot of people in the US will trade oil futures using that think or swim platform. It is available, the VWAP Predator, for lots of other platforms. So I'm going to keep it simple. I'm just going to talk about entries, stops, and then managing the trade just with this one trading indicator. So remember, one of the biggest points of time in oil is the oil pit open. Now, it's not a physical open anymore, but it's when lots more traders, lots of oil traders, especially in the US, start work. They start trading and you get big moves. So if you're in a trade before that, you need to be out. And then when you're in a trade after that, that momentum would continue. So the VWAP Predator volume weighted average price is this little blue line that we see here moving around on the chart. These are our fib extensions of that VWAP Predator. Now, most people just use VWAP just to give them a sign whether it's either bullish or bearish. There's no real entry strategy with just using the VWAP. So the VWAP Predator takes a lot of the behavioral logic that we use within the manager and uses it to identify good buying or selling opportunities. Now, there are lots of rules for these buy or sell signals, and I'm not going to go through them all now because it's all done behind the scenes. It's all proprietary logic. But at the end of the day, we give the buy and sell signals, and I'm going to do some basics on there. So leading in early morning US, we do get some good moves in oil leading up to that oil pit open. So we've got a buy signal here. See where the candle opens below the VWAP and closes above. Then there's a lot more volume criteria to that. So that candle has more volume than the previous candle. It actually has higher than average volume as well compared to the specific look back period that we use for that time of the day. So then we get an entry at 72.64. So we want to go one tick above. Okay, it's like a start line, if you like. So use a stop market order. When the price goes through there, you'll start your trade. Your stop is below the previous pivot or below the signal candle, because when these move, they move quickly. You need to keep tight stops and let it run. So to manage this trade now, we've built in part of the manager into this thing, just the ribbon, but the ribbon is green, and then when it turns red, you want to get out. But at this point here, 9 AM EST is when the oil pit opens. You need to be out of your long trade, or if you're short, before that oil pit open, because you know it could continue, but you don't know. You've not got a crystal ball that once that high volume starts to come in with that oil pit open, it could well reverse, which it did yesterday. So you need to take that profit. So that's 73.46, and the entry was 72.64. So about 80 ticks, $800 trade. It's a good move per one contract. To manage this, it's simple. Just wait for little pullbacks and then just adjust your stop to the pivots. So this pivot comes below the entry, but it reduces your risk. It goes up, it pulls back, you get another entry here, you adjust your stop there to start looking in a little bit of profit here. You can be more aggressive, go 2 candles behind, especially when you get another buy signal here. Just before you're planning to take out your trade, you could put your stop just underneath this signal candle there. But again, come into the oil pit open, make sure you close before that happens. Then we get the oil pit open at 9 AM. Then we get a sell signal. You see the candle now opens above the VWAP, closes below the VWAP. It has more volume than the previous candle, so there's more sellers. Okay, it's a distribution candle, and the software identifies that. It also identifies its higher than average volume. It gives us a sell signal. Again, one tick below, get in. Nice tight stop, 1 or 2 ticks above the signal candle, and it just goes hell for leather all the way down. Okay, when the cloud turns green at 71.51, that's when you get out. The entry was at 72.59. That's over 100 tick move. So we've taken approximately 100 180 ticks. 180 ticks, $1,800 for that trading day. 2 trades, that's all. If you're a little bit late, you can take this sell signal on the extension here where it opens above, closes below. This one is a little bit too late. You're too late to the party. You don't want to be taking that signal there. So remember, it's about being in front of the computer at the right times of the day. Oil, if you can't get up early, wait for that oil pit to open and look for those trades. And then if you can get up early enough, there's some great trades leading into that, because European traders are still trading oil. It's not as much volume as the US, but there's some great trades using the VWAP Predator. And this was $800. You know, this was $1,000 or $1,100. This is a $1,900 day per one contract, just 2 trades. You don't need to overtrade. You need to have a sensible trading strategy, and VWAP Predator, especially for futures, Forex, as long as you've got a good data feed, which you do with Thinkorswim. We only develop for platforms that have those good volume feeds, because it relies on that data. So instead of now just relying on that VWAP line to tell you whether it's either bullish or bearish, we can actually give you some signals now. We can use that logic to give you some fantastic signals, and even on stocks as well. So this is a very sort of what we call instrument agnostic, which is a posh term, but basically works on anything, any instrument, and it's a simple strategy to follow. And looks great. It's simple. Buy, sell. Make sure you've got enough fresh air and it's the right time of the day, and then we can manage it with the manager down all the way down. When that ribbon turns green, flatten the trade. Simple as that. Listen to the manager. Got a buy signal here. At this point it turns to red, but again we need to be aware that the oil pit opens, so we take the profit just before that happens. So hopefully that helps. I'm going to put the link down below this description for the VWAP Predator for all the different platforms: Thinkorswim, TradingView, Motive Wave, Ninja Trader, that sort of thing. So that's going to be down there. This is a great tool, and it's simple to use. All that complex logic is done behind the scenes, presented on the chart very simply for you, and tradable.